Hey traders, welcome back to another lesson. For the past few days, I've been trying to not do any recording on any lesson because what happened to my grandpa. I didn't have the energy to record any lesson. I should have a few topics coming up as well, but in today's lesson, let's talk about how do you actually know when to size big, when to size small, especially really understanding trading as a probability game like a casino. So I'll give you one example. So if let's say today you are on a 6 losing streaks, right? For some of you, let's say you lost 6 or 7 trades in a row. For the majority of the people, when let's say they lose 6 trades in a row, -1, -1, 3, 4, 5, 6. Let's say they lost 6 trades in a row. What do you think is likely to happen to their emotion? Normally they'll get really panicked, they get really concerned, and they start doubting the system and say, hey, right now I lost 6 trades in a row, 7 trades in a row. Does that mean that my trading system is not really working? Does it mean that I'm not sticking to my plan? Does it mean that I'm deviating any sorts of thing from my initial edge? Sometimes it's not. You need to know probability is a myth. So let's say today you have 40% win rate, an average of 1 to 2.5 RR, risk reward. Or even if you have a 50% win rate, you could be experiencing 10 losses in a row. So you might be asking, hey, why would I experience such a deep drawdown if my win rate is 50%? The key thing is, out of 10 trade, if 50% win rate, technically speaking, it means you win 5, lose 5, right? But the key thing is the probability is in such an odd sequence, which means, let's say out of 30 trades, for a 50% win rate, means you're supposed to have 15 wins and 15 losses. But what if I tell you all of your 15 losses just comes all together at the same time? These are things that you just cannot predict. You could be losing 15 trade, winning 30 trade, and the probability goes on. Or you could be losing 10 trades and then win 10 trades and lose another 5 trades and win the remaining of the wins. These are just something that you cannot predict, and that's why I always tell all of you, what's more important is really to stick to your edge, stick to what you're doing. If you already know it's working, don't too easily change it. You can do some refinement. Let's say you say, my win rate is really low this month. I realize a lot of the setups just go to 1 or 2 R. What does it mean? Let me just show all of you. Let's say you take a long here, and a lot of the position goes, let me just find an example. Let's assume you take a long here, price goes a little bit, then come back into your stop loss. And this, let's say it has happened for the past 10 trades, for the past 5 trades. So when you know this kind of things is happening, there are 2 possible reasons. First reason, you're trading in the wrong condition, which means the market is just range bound, but you're treating it like a trend. That could lead to this. Second reason could be you are just on the wrong direction. Let's say the market is on a heavy uptrend, but you're shorting. That itself could be a very easy or a very big trap to a lot of even if you're an elite trader. So let's say if you're too biased on one direction, which means you go short and then price goes, or 1 R stops you, and then go short again. This could also be the second main reason why most of your trade just goes 1, 2 R and goes straight to your stop loss. The second reason, because you're just on the wrong market direction. The first reason was on the wrong condition. Let's say the market is just ranging, Then you keep getting in here and then you expect. You go in here, you say, oh, it's a trend. And then it comes back to your stop loss. And guess what? When price comes back and you still treat it as a trend, or you even treat it as a breakout, let's say you take a long at the high, stops you out again. The third reason could be your expectation is just too much, or you just don't understand what's happening right now. Because sometimes market is cycle. It could be in a volatility contraction cycle, which means volume is low, market is not going anywhere, but you just keep blindly pushing so hard. You scale into all of the position where you're not supposed to scale in. That's why yesterday Horace talked about this. He said, not all of the positions deserves a skill in. Not all. Okay? So if today, let me just open up my Telegram, and if we have a look. Let's find the conversation Horace said. Yeah, so Horace yesterday said not every trade needs to be skilled in, especially if you're trading on the low time frame. You're skilled in only when the market proves him right, which takes time as he lets the trade run, mostly looking at the 1 hour, 4 hour chart. That's what I'm saying. If you're skilled in too aggressive on every single position, that only means one thing: you have a lack of experience to identify what's the high quality and what's the low quality setup. If you skill in unprofessionally, which means you see something you just skill in, over the long term, it may not be increasing your success. It might even damage your expectancy, because that trade itself is supposed to only go 3 hours and come back to your losses. But because you skill in so hard, prices go 2 hours, you skill in at 2 hours, let's say. One of the worst thing you can ever do is price do this, your initial entry, then you skill in here, and right after you skill in, it comes all the way back, and then you did not manage your trade, you did not do any sort of trail stops or whatever, it comes right back, hit you out for 2% or 3% losses. Don't allow any of these things to happen, because over the long run, if this thing keep happening, you may not even be profitable. You might be losing money over the long term just because you don't understand. The reason why you're skilled in is because this setup itself, after so much assessment, after having multiple confluences, it is just so high quality. The quality is so high up to the point where you say, I'm gonna scale in here, even if I sacrifice a bit of price position, I don't mind. Now, because when you scale in, your average entry price goes higher. Let's say if price goes up, you scale in, your average entry will go up. Let's say, okay, like this. Your initial entry is here. Let's say you get in at, sorry, I'm using a trackpad. You get in at $1. Let's say you scale in here. Then what happens is your average entry goes from $1. It goes higher and higher. Maybe right now your average entry is sitting here. If price comes down, tap you, and reverse all the way back, you probably are already out for break even or whatever. So skill in is a technique. Alright. So goes back to the probability sequence. So how do I normally use this probability sequence and just understand this, how can I say, this casino game, and place my bets accordingly, my bet size accordingly. So if today I realize I'm in a 5 losses losing streaks, normally that's when I go a little bit more heavy. So some of you may not agree, or you may even have a big question mark here and say, hey, why do you size in when you're on losing streaks? Because this is only if you did not deviate from your plan. If you did not deviate from your plan, and if you know exactly what you're doing, you know exactly how your system works, the probability, whatever, your edge, You know, when the losing streak gets too long, that means your winning streak's about to come. It's always this probability game. It never run away from this. So when I lose multiple trades in a row, normally I'll start sizing it a little bit more heavy because I know the winner's about to come. How do I know the winner's about to come? Math, based on math. So I just want to, through this lesson, just tell all of you the key to profitable trading. There are a few secret recipes. The first one, the really good trader, the elite trader, the 7 figures, 8 figures trader, they always know when to size in big, when to size small. And also, this directly also links to what Horace shared yesterday. Why not all positions deserve heavy sizes? Why not all positions deserve a skillet? Right? Second thing, when you're on a losing streak, as long as you're stuck to your plan, stuck to your system, you should be happy instead. You shouldn't be upset. Because when losing streak drags longer, the win's about to come. Third thing, don't get too excited when you're on a winning streak, because when you're on a winning streak, the loss is about to come. It's the exact opposite from point 2. When you're on a losing streak, don't get too upset because the winner is about to come. When you're on a winning streak, don't get excited because the loss is about to come. And the last thing is really understand your strategy well. And by understand your strategy well, it also means understand the stats, understand the data. Go back and really study what's your worst performance like, what's the worst drawdowns numbers like. Because once you know all of this, you are technically bulletproof. Most of the traders, even if you are like watching this video, like all of you in the trade club, the main reason why you're getting stressed over drawdown is because you don't know how it works. You don't know how your system works. So once you know it, then you'll definitely be better. So yeah, that's it for the lesson, and I'll talk to you later. Bye bye.